Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on euro currency. So this week it was absolutely tough. It's a lot of events, really huge amount of the events, so we're trying to consider only major ones in a weekly report, otherwise this report might be really very extended. So we're mostly focused on general conclusions that we could make from recent results. We think that it makes no sense currently trying to gambling on whether Donald Trump, what tariffs he will impose on China and what tariffs he will impose on European Union, so what taxes he will cut and what particular he will do. We're trying to follow just the common sense and watching for major events in general picture. Because for us, his major task is to estimate the direction. So from that standpoint of view, obviously, we come to conclusion on the two moments. First, whatever tariffs or taxes will be imposed and cut, as definitely will happen. Because otherwise, it will appear that Donald Trump just had deceived their voters, right? If even these tariffs will be cut for a few times, not the 60%, for instance, on China, but just the 15%. This is first moment. Second moment, as we have come to conclusion in the report, and if you will read the logic of the discussion, you will see that definitely these tariffs will have inflationary nature. It will increase the inflation in the United States, not really immediately, but with the lag of the 6-8 months maybe, but this definitely will be inflationary. So we're not sure that the Fed will start rising rate again, although the JP Morgan and the Bank of America think so. But even without this, rising on the inflation in the United States at the first stage will increase the demand for the dollar, because everybody will expect that Fed will start rate rising soon. This is what about United States. There are also some other additional issues we have, and we discussed there. It's very interesting what's going on right now. And now we should take a look at the opponent of the United States dollar, which is euro, that we're interested in. Now you do know probably what's going on. There's big political crisis in Europe right now, starting in Germany, but everybody involved right now. So the master has changed in the United States, and everybody will try to please the master and trying to change the shoes as soon as possible. So they actually now, in two words speaking, this is the panic in the political rounds in Europe. So taking it all together, and Donald Trump doesn't want to pay to European Union. He doesn't want to support them. They would like to make that Europe to pay the United States. Taking it all together, it means that Europe has really dark perspectives. And whatever will happen with the inflation will start rising within a half a year, probably later. We're not care too much about this, because we need to know what will happen in the nearest few months. We think that it's really highly likely that we could see the downside continuation and action back to the parity in the nearest 6 months on the euro currency. We will see how market will open, but something tells me that investors will come to the same conclusion very fast, very soon. So obviously we have the bearish context currently. And technically we have the background as well for that. I remind you that we have the bearish grabber on a quarterly chart on the EUR, which is actually suggests drop below the parity to the 95 target that we have below the parity. So all these points taken together creates the overall picture that we have. Besides, trends on all time frames are bearish, and it means that currently we have the bearish context. In fact, markets just stands on the ground only thanks to agreement support area around 107. This is COP target and fib level. Once it will drop below it, it will be some support vacuum until 104.50, 104 area. So we will be relatively free space. Yes, we will have there some previous lows. We will have the dynamic oversold ratio. It stands right now around 106 on the weekly chart. But this is not the strong support. This is dynamic support, and it will change over time. So the breaking down this area will open the wide space for further downside action. But at the same time, you could see what's going on here. Very tricky moments exist. First of all, you could see that our grabber has not actually worked. The market has dropped below it, closed almost below it, and turned the trend back to the bearish side again. But at the same time, if you take a look at the dollar index, you will see that this market has formed another grabber in the same direction, suggesting some deeper retracement. On the gold, we have currently weekly bullish grabber, although yes, it could have different nature and doesn't promise anything to euro currency. But still, gold could go up in the next week. And 10-year bonds are not rising anymore, still standing flat here after the drop. So you should understand me correctly that all these signs create some background for the possible euro pullback, despite that on the euro, grabber has failed. So it means that market actually could turn to some churning action around this support area for some time. It might be really opposite action, wobbling around it day by day, so not very pleasant environment, but this is really what could happen. And currently, with the background on the dollar index, on the bonds, I wouldn't hurry up or take a new short position right now by the two reasons. First of all, is because of the performance dollar index and the bonds. Second, because euro itself stands at the support. So I do not want to sell right at the support there, although we have the bearish overall context. And taking it all together, we're coming to just final conclusion. That's the only thing that we have is just to wait for a deeper retracement, some pullback here. For instance, I would be really happy if we will get something like this. So this will be just great. Some bounce back to the 108 resistance, either 50% or slightly higher to the 618, around 108.50, somewhere in this area. Given us garbage triple to sell, might be a great continuation and opportunity to consider taking the position. So that's at least for those who trade on a daily time frame. If you still would like to take the short position, despite what I'm just talking about, you probably makes sense at least to wait for a bounce on some levels. Just if you anyway would like to sell, maybe you consider butterfly here on the hourly chart. This is also might be the strategy, but it's very short term. That's why we're talking about some different things. Wait at least for some bounce. Do not sell right at the lows. So if market will show the minor bounce here, it will give you at least some protection. Although, as I said, our major position is to wait for a bit more extended retracement, some moderate pullback. At least we have the bullish signs on other markets. If situation will change on the dollar index, if it will change on treasury bonds, of course we will adjust our strategy as well. But for now, for beginning of the week, I think that to wait and see what will happen, how investors will open the market after sleeping with this new reality after Donald Trump victory, it also will be interesting to see. And we think that maybe it makes sense to wait and see what will happen in a year's time.